everyone. Welcome to today's webinar. My name is Joe Torrey. I'm one of the investment counselors here at the Real Wealth Network, and I'll be hosting today's webinar, which will be on Central Florida, basically the area between Orlando and Tampa. All right, just a few housekeeping items, and we'll get started. First of all, if you like what you hear on today's webinar, we're going to talk about the market and the job growth and the population trends. And on Thursday, we're going to have a property showcase that will show you actual properties available for sale to invest in this market. So you'll need to have a strategy session to attend the Thursday one. So if you haven't had one already, you'll get an email after this broadcast. Just click on the button there and set up a strategy session for tomorrow. I have time open for strategy sessions. Then next Thursday, we're going to have another webinar. This one will be about our syndication in Costa Rica. So you want to save the date. Okay, we also have some live events coming up. In July, we're going to have a live event on Saturday, July 13th in San Mateo, and the following day in LA. The markets that we'll be presenting will be Jacksonville, Birmingham, Alabama, Dallas, and then Kathy will be there in person and will give you her mid-year report on what's going on and her prognosis for the rest of the year. And then in August, we're having an event in the East Coast in Cleveland, Saturday, August 10th, and all of our affiliates will be there. They'll have a half hour each to get up there and talk about their markets and what's going on and sample properties. So it's a great crash course and every affiliate in the Real Wealth Network in one day. Then the following day, Sunday, August 11th, we're going to have a property tour of Cleveland. We'll get in a bus and drive around and look at actual properties in that market and neighborhoods. As I said, my name is Joe Torrey. I've been a Real Wealth Network investment counselor almost 3 years. I've been an investor for about 15 years. And before that, I worked in high tech like everyone else here in the Bay Area. Before I forget, if you want to ask questions during the webinar, you should see in the upper right-hand corner of your screen an orange rectangle with an arrow. You just click on that, and then a dialog box will open up at the bottom, and you can type in your question, and we'll get to as many questions as possible at the end. So for those who are new to the network, let's just go over some groundwork here. Our purpose as a network is to simplify real estate investing, and we want to help you create passive income so you can live life on your own terms. And there's a picture of our founders, Rich and Kathy, who are surfing in Malibu, living life on their own terms. And that's what we want for you. The advantages of joining the Real Wealth Network: one, there's a lot of free education. We have webinars, white papers, podcasts, and other information, so you can learn about the real estate investing. When you're ready to invest, you have a strategy session, and we can connect. That's all free as well. And we can find out what your goals are and what you're trying to accomplish, and then see if we can put together a plan for you. And then after the strategy session, you'll have access to a lot more information on our site, which is also free. Everything here is free. So you can get a lot of free education and advice, and then move forward. So some common FAQs that we get about the Real Wealth Network. One, we don't do flips. So if you're looking to buy a house, fix it up, and sell it, that's not what we do. We help investors find quality, rehabbed investment properties for a long-term buy and hold. So over time, the tenants will pay off the loans for you, and you'll own the properties free and clear. If you do plan to purchase property with cash, you'll need at least $60,000. That will cover the payments and the closing costs in our least expensive markets. That would be like Detroit. For most markets, it would be more than that, closer to 100. Sometimes people use IRA money to invest in property. You'll need at least $50K in your IRA. That's enough to cover the down payment and get a non-recourse loan. And you should have a little reserves in your IRA in case you need any repairs to the property down the road. Okay, conventional financing is how most people invest in property. You'll need a credit score of at least 680, a 2-year job history at a U.S. company, at least 20% down payment, 6 months of reserves, and a low debt to income ratio. So debt to income is how much debt you have, credit cards, car payments, mortgage payments, versus your gross income. The bank wants to see a low debt to income ratio. The lower the better, so you're less risky as a borrower. And also, due to Fannie Freddie rules, you're limited to 10 finance properties on your current credit report, and that includes your primary residence. So if you have a mortgage on your primary residence, your house, that means you have 9 left that you can use for investment property. If you're part of a married couple, you can get 10 properties in one spouse's name and 10 in the other spouse's name for a total of 20. So that's one way to get around it. So, but that's what you're limited to. All right, here's our standard disclaimer. As always, real estate purchasers are subject to investment risk, including the possible loss of amounts invested. And while Real Wealth Network uses its best efforts to screen, review, and understand the operation of each of its affiliates and their related companies, we cannot and do not guarantee the performance of investments offered through these companies. So we don't own these companies. They're companies in different markets around the country that we thoroughly vetted and screened, but we don't control them. So you'll have to work with them directly and make sure you do your own due diligence. It's the responsibility of the investor, that's you, to perform your own due diligence and analysis before retaining an affiliate and prior to purchasing an investment property. And for any property you buy, we recommend, in fact, we require you to get an inspection from a licensed home inspector to make sure there's nothing wrong with the property, and then order an appraisal so that you know that you're not overpaying. You're getting the property at or below market value. If you're financing, the bank is going to require an inspection and require an appraisal because they're using the house as collateral for the loan they're giving you. But even if you're buying all cash, you should still have the inspection and the appraisal done just to protect yourself. Okay, so here's a map of where Real Wealth Network is located in various parts of the country. As you can see, about half of our markets are in the Midwest: Chicago, Indianapolis, Ohio, Detroit, and so forth. And then the other half are in the Sun Belt, like Texas, Florida, Alabama, New Mexico. Today we're going to be talking about Central Florida, which is where that blue star is. It's basically the area between Orlando and Tampa, which is that orange circle to the lower left of the blue star. There's a freeway, Interstate 4, that connects the two cities, Orlando to Tampa, and that whole area between the two is being built up. And someday it'll probably be one big city like Dallas-Fort Worth. It's just growing. So that's the area we're going to be talking about today and on Thursday. All right, so some basic facts about Central Florida. According to Forbes, it's the #1 place to invest. 1,000 people are moving there every day. The Tampa-Orlando greater metro is growing together. Like I was saying, they're fusing and becoming one big metropolis. They're growing together to make the largest metro in the southeast, similar to the way Dallas-Fort Worth is in the southwest. It's the most visited place on the planet. That's because of Disneyland. 60 million people visit Orlando every year for Disneyland. Even during the downturn in 2008, I think it went down to like 50 million, but there's still lots of people from Europe and other parts of the world, South America, that come and visit Disneyland. There's no state income tax. It has among the lowest unemployment in the country, and it's very business friendly, so a lot of companies are moving there, and there's a lot more. So here's a snapshot of some of the larger employers in that market. NASA is there. Cape Canaveral is about 20 miles to the east of Orlando. And of course, all the aerospace companies are there too, Lockheed Martin and so forth. The University of Central Florida is there with something like 60,000 students plus staff and professors. There's a lot of restaurant chains headquartered there. Red Lobster, Olive Garden, and so forth. Of course, there's Disney World and SeaWorld, and a lot of healthcare. Let's see. Also in Tampa, you have MacDill Air Force Base, which is where U.S. Central Command is located. To give you an idea of scale, Walt Disney World in Orlando, that development is bigger than all of San Francisco, just to put it in context. This is more for the Orlando side. The population growth has been very strong, 17% in the last 8 years. It's currently at 2.5 million for the greater Orlando area. Job growth is very similar. There's some hiccups, but for the most part, it's very steady up and increasing job growth. One thing to note about the Orlando-Tampa area is that it's a very desirable retirement destination. So they're not as dependent on jobs as other parts of the country. So if there's a recession, it doesn't matter that much because about 12% of the population is retirees, and they don't need jobs. They have money, and they spend money on restaurants and travel and leisure, and they keep pumping money into the local economy. So it's a fairly recession resistant, I won't say recession proof, but recession resistant area of the country to invest in. This is a comparison of the average selling prices. You can see the orange line at the bottom and the neighborhoods that Real Wealth Network invests in and the type of properties we invest in. The average price is much lower than the national average and much lower than the metro area. A lot of the homes in that area are big mansions, 4 or 5 bedrooms with swimming pools, and we don't invest in those. Swimming pools are great if you're going to live there, but if you're a landlord and you have tenants, you generally don't want swimming pools because if someone drowns, you could be liable. So the houses we have are 4 bedrooms, single story, smaller, good solid homes, and below the national average and below the average for the area. So it really helps when you have a $150,000 house and there's a development down the street that's building $350,000, $400,000 houses. It's good for your property values. And the same thing for rents. The rents are almost as high, $1,304 versus $1,400. But the prices, as we saw in the previous slide, are only about 75%. So you get more bang for the buck by investing in the kind of $150,000, $200,000 properties that we offer, and you get just almost as much rent. Let's see. Okay, so here's a map of the area we're talking about. You can see Orlando in that shaded area, and then Tampa in the left side, the west coast of Florida. And you see a 4 there, that's I-4, the interstate I was telling you about. So most of these properties are going to be in the Lakeland area and Kissimmee, in that area in between the two. So commutable to either market, but inland. So if some of you are concerned about hurricanes, you can be further inland and not have to worry about that. You might have some rain, you might have a shingle blown off, but you're not going to have any serious hurricane damage in this area. It's the second best place for jobs in the state of Florida. Sarasota, which is south of St. Petersburg, is number 1. Unemployment is very low at 3.9%. The average home price is about $250,000. Annual population growth is over 7%. Job growth is 7%. Home price appreciation is about 9%. And I don't know, 2021 price growth forecast 35, that seems aggressive. I don't know when that was the starting point. It may be a 5-year or a 4-year projection. I don't think it'll go that much in 2 years, but it's also one of the fastest growing cities. It's the second most popular location for conventions in the United States. Number 1 is Las Vegas. It's a top destination for second homes. There's a lot of people on the East Coast in New York and so forth. They have a second home in Florida. It's a top retirement destination. There's about 180,000 college students in the greater Central Florida metro area. Very diverse employer base, as we saw earlier. And it's a hub for nationwide and international business, especially the Latin America and Europe. The number 1 family destination, and as we said earlier, the most visited city in the world. Okay, so that gives you an overview of the market and why it's a good place to invest. So now let's look at some sample properties. Here's one. It's a 4-bedroom, 2-bath, new construction. All of these are new constructions. This one's 1,700 square feet. I'll go through the first pro forma in detail. So with 20% down, you have 80% loan to value at a 5.25% interest rate. So for a house that's about $200,000, you have to put about $40,000 down. That looks like, yes. And closing costs. So you're totally all in to the investment for $43,557. And then if you subtract that, you look at the principal and interest payments, the property taxes, insurance, and property management, your monthly expenses will be $1,353. This property would rent for about $1,600, and so you'll be positive about $247 a month or $3,000 a year, which comes out to about I think it was 7% cash on cash return with financing. And if you bought all cash, then there'd be no mortgage payment, so you would get more cash flow, but you have a higher investment down. You'd have to put $200,000 down, so you would get about 6.5% cash on cash return, $13,000 in cash flow after all expenses on a $200,000 investment. Notice that the house is a single story too. We only buy single stories in this market. About 13% of the population is retirees, and they don't want to go up and down stairs if there's second floor, you know, if you have a bad knee or a bad back or something. So by having a 2-story house, you immediately eliminate about 10% or 12% of the population from a rental pool. So by having single-family homes that are single-story, we can have a cast as wide a net as possible and attract as many potential tenants as possible. Here's another one, a little less expensive, $190K. Down payments about $38. With closing costs, you're all into the property for $42. Total expenses are about $1,232 a month. The rent is $1,650 a month. So the cash flow is a lot better. It's $400 a month or $5,000 a year. And 5 divided by 42 is about a 12% cash on cash return with financing. So that's pretty good for a brand new construction home, 1,800 square feet. And the all cash scenario, you get about $15,000 in cash flow on a $190,000 investment. All right, last one. This is an artist rendering of a new construction. Same general price point, $195. You put $39,000 down. You're into the property for $42,900. The monthly expenses are $1,242. It rents for $1,600 a month, so you make about $360 a month in cash flow, or $4,200 a year. So you get good, healthy cash flow. But the main attraction of these homes is that they're brand new and that they have a very good chance of appreciating. As Florida increases in population, I don't know if everyone on the call knows, but 10,000 baby boomers are retiring every day, and Florida is the #1 retirement destination. And in 2016, for the first time, Florida passed New York as the 3rd most populous state in the country, after California and Texas. And we see that trend continuing. So as the demand for housing goes up, we expect rents to go up and property values to go up. So even though the cash flow in itself is a good reason to invest, there's also the potential for appreciation. So with that, we can turn to some questions. Let's see if we have any questions here. Insurance premium seems to be low. What about the tenant placement fee? Those are questions we'll get into on a Thursday webinar. Our affiliate will be on the call, and her property management person will be there, and they can talk about the cost of, the property management, which is about 8%, but also all the fees associated with it. Let's see, any other questions? Good potential for appreciation. You ever get 2 to 4 units? Generally not. Occasionally there's duplexes available, but for the most part in this market we'll have just single-family homes. How many properties do you have per month? That would be a good one to ask the affiliate on Thursday. We have, they're new construction, so the developments, they have them, you can reserve them in advance and have them reserved, so then you can get as much inventory as you need. And there's a limit on how many rentals there are going to be in any given development. So you're not going to have a new development full of all tenants. Let's see, any other questions? Do you offer discounts for multiple properties? I don't believe she does. What cities do you currently have homes available? Kissimmee, or it was on that map, Kissimmee, Florida, Lakeland, Florida, those kind of areas. Average days to renting. The average days to renting is pretty quick in this market. The only, like within 30 days. Usually it takes 30 days to get the loan approved, and by that time they have a tenant or at least a signed lease. The only time it might be slower is around the holidays, because around Thanksgiving, Christmas, New Year's, people don't move as much. They want to hunker down for the holidays, but that might be longer then. But given the climate and location, a lot of people, it doesn't take long to find tenants. Do you have a property manager? Of course we do. We can't be in a market that we don't have a property management company that meets our criteria, our standards. Property management is the #1 reason investors fail. So there are a lot of markets that we like, but we can't be in them because we haven't found good property management companies. Here we have a very good property management company. And again, as to how much they charge, that would be a question for the Thursday webinar. Thursday, we're going to talk about live properties that are available, and the property management company will be on there. All right. I think that's about all we have for questions. Kissimmee versus Lakeland, what are the pros and cons? They're pretty indistinguishable. Kissimmee's a little further inland, so if you're concerned about hurricanes, You can be further inland if you want, but for the most part, it's pretty much a wash. It really comes down to the deal, which property you're getting, how much it costs, that sort of thing. How do we join the Thursday webinar? If you've had a strategy session already, you'll get an invitation by email to join the Thursday webinar. If you haven't had a strategy session, you'll get an email right after this webinar to schedule one. You can schedule one either later today or tomorrow, and then once we have the strategy session, then you'll get an invite to the Thursday webinar. All right, that looks like all the questions we have. All right, so if you're interested, you like what you saw today and you're interested in learning more, you can attend this Thursday's webinar. We're going to send you an email after this webinar if you attend it. So you just click on the link and schedule a time to set up a strategy session for tomorrow. If you're not interested in this part of Florida, but you're interested in general in investing in real estate through the Real Wealth Network, you can schedule a time to connect some other time later next week. There's no rush. Schedule a strategy session and we can see what your criteria are and put together a plan for you. Okay, I think that's everything we have for today. Thanks for attending. That concludes today's webinar. Hope to see you on Thursday and enjoy the rest of your day.